Jim Cramer takes viewers on a roller coaster through today's unpredictable stock market, where individual company stories matter more than ever, and short sellers are getting steamrolled by surprise news. But what happens to those good companies quietly posting solid numbers? Are they doomed to be ignored forever, or is there a twist coming for the underdogs?
The NASDAQ advanced 1.21%. Let me give you some examples. By now, we all know about Palantir, the one-of-a-kind juggernaut meme stock that can't be stopped. It's part sledgehammer, part laser, part nuclear bomb, and part Saquon Barkley. I mean, this thing's incredible. Now, some of that's because CEO Alex Karp just keeps delivering, not just with great contracts, but with revenue growth and incredible margins. This guy is crushing it like no other. But let me give you the dirty little secret of the success of Palantir. His name is Shane. So I'm at lunch today, and Shane wants a picture. Love that. You always get the picture. Sometimes I'll even ask you, do you want the picture? No hubris, just being nice. I may be a little hubris. In return for the pic, I asked Shane what he's up to now in the stock market. Oh, Shane seemed mystified that I wanted to know what he was doing. Of course I did, I said. Shane said, you know what I'm doing? I'm buying put options. I said, oh, and what are you buying put options on? Palantir. There you go, Palantir. The path to Palantir riches being paved on the backs of the put buyers, those who use options to bet against it. I told him he needed to focus. He was not focusing. If he was betting against Palantir, he wasn't focusing at all. Fortunately, he limited his risk with puts and not outright shorting. He wouldn't have been at lunch if he were short. He wouldn't even be able to go out in public. Believe me. And look, this short-busting Palantir is not alone. Stocks in this market fly when they're heavily shorted and something good, anything good happens. Take Arista Networks, one of my faves, the data center networking play. The last quarter, well, I got to tell you something. It bombed. The stock's been creeping up ever step by step, inch by inch. The shorts were increasing their bets the whole time. They figured it was like shooting fish in a barrel. Then Arista reported, and the numbers, they were stupendous.
That was easy.
The last quarter was an aberration. CEO Jayshree Ullal gaffed and gutted the short sellers. Like when you catch a bluefish, you gaff. The stock managed to shoot up more than 17% today. You don't find ordinary longs paying up like this. It's the short sellers panicking, knowing that they're done. Stick a fork in them. They have no choice but to buy to close out their now losing positions. It doesn't matter how big the stock is. In this market, ever since Liberation Day, the hedge funds feel emboldened to take on stocks. They're willing to take on anything. And for the most part, they keep getting their heads handed to them. Let me give you two salient ones. First is Amazon. The company we know as a retailer put up fantastic retail numbers when it just reported. It crushed in advertising. But when it came to its quiet Amazon Web Services division, the business where the big money's made, the one that competes with Microsoft's Azure division and Google Cloud, well, guess what? We got a whole new narrative. It was one of a penny-pinching Amazon, underspending, and not buying the latest and greatest NVIDIA chips, the ones that young companies thrive on when they want to develop software. This narrative of Amazon being a shared donor to OpenAI swept through Wall Street more quickly than the Mann-Gulch wildfire back in '49, incinerating those who stood by the stock like my charitable trust. No fire department anywhere. But then yesterday, Amazon announced a deal with OpenAI that could be the beginning of an effort to catch up. Customers might not migrate to Microsoft Azure, which is joined at the hip with OpenAI. More important, it was a signal that the shorts had pressed their bets too hard and longs flooded into the stock that had been down 10% between Friday and Monday. This is Amazon. By midday, I wonder if the shorts didn't get wise to the fact that Amazon's no pitiful, helpless giant. If it wants to play catch-up, it will simply spend more money because it's got it to spend. Or how about Apple? Another charitable trust holding. You know what I say about that one. I say hold it, don't trade it. Now, it's been dealing with this has been a stock that's been left for dead after a very good quarter because it has no AI strategy. And it's in the crosshairs of the biggest short creator of all time, or at least it was, President Trump. The president crushes individual stocks for breakfast, like Wheaties. And wherever Tim Cook decides to build phones, the president is going to hammer him, we thought, with tariffs, as long as those factories aren't being built in the United States. Cook wants to make his phones in two countries, India and China, and those have become the biggest targets of the president's trade policy. We already knew that Tim Cook had pledged $500 billion to building stuff in the United States over the next 4 years, including some parts of the iPhone. Good, but it didn't move the Trump needle. The president wants the biggest deal of all time, ever. I mean, like, ever in history. The history of all deals. Sure enough, Tim Cook announced today that Apple will increase its commitment to $600 billion and will support a new American manufacturing program, or AMP. If you thought the last one was big, this one is really big, covering 50 states, especially Arizona, California, Iowa, Kentucky, Nevada, New York, North Carolina, Oregon, and Texas. Holy cow. This investment is bigger than the GDP of Vietnam or the Philippines or Norway or Singapore or Thailand. It's creating a country within a country. The United States of Apple, also known as the American Manufacturing Program, will be putting Apple on the course to making the iPhone here. And the president is appeased. Now, you may say, is this all incremental? I say, who cares? If this immunizes Apple from tariffs from China or India because the big man has finally gotten the number he wants, well, then so what? So be it. The shorts will have to cover, which they were doing all day, by the way, hence the stock's 5% gain. Oh, but there is no immunity from a new 100% tariff on imported chips unless they're in the process of building here or made a commitment to do so. I bet there'll be plenty of commitments by the ones who haven't thought about doing that. But then there's the other side of the trade. Stocks that just go begging because there's no narrative that can attract attention. Take Disney. The company made a major deal with the NFL last night on the eve of earnings that were usually positive, but no one cared. Disney reported a nice beat and raise, but one that should have sent the stock flying, but no. Because it didn't raise its earnings forecast enough, the stock got hit. Disney beat the earnings estimates by 14 cents, but it didn't pass all that beat on to the full-year guidance. That's deadly, suicidal even. It's an implicit cut to the forecast. You have to raise your full-year earnings guidance at least as much as you beat the quarter, or your stock is just going to get clubbed. It didn't need to be that way, but management played it safe. Safety took a vacation. Or there are stocks like breakup stocks like Honeywell and DuPont. Both reported excellent quarters, the latter being a real standout. But like Clark Gable, at the end of Go On With the Wind, this market said, frankly, my dear, I don't give a damn. These stocks may languish until their next quarters because no one can think of a reason to take either side of the trade until we get closer to the actual breakup. So here's the bottom line. In this market, haters going to hate, okay? And when they hate and they're wrong, they turn into buyers. And lovers, they just keep buying. And when there's nothing happening, even if the stock is dirt cheap, who cares? In this market, the answer is nobody.